Well, ladies and gentlemen, we had yet again another red day in the stock market today, and we got to break it down in this video. We have to break down some stocks, charts, what I'm looking to do in these crazy markets. So before we do, make sure to get your free money from Moo. Use my link down below, deposit at least $100, and you get one free share of NEO and up to 5 other stocks, each of which could be valued up to $3,500. Again, use that link, deposit at least $100, and boom, you get some free money, and it also helps out me and the channel, and I do appreciate all of you guys as always. And with that being said, let's get into the video. Let's break down what the heck is going on, because we got a lot going on. SPY today ended up going down 0.75%. We had the NASDAQ and the Russell down 1.9% each. The Dow broke even as the VIX went up 3.3%, and we had gold down 1.5% and silver down about 3.4%. So what we're noticing is overall today, volatility spiked back up, but we didn't see that same buying pressure, not even buying pressure, but upwards pressure in gold and silver. Gold and silver, as we all saw last week, silver was up over 26 an ounce, and we had gold up well over 2,000 an ounce. So we're still getting a relaxation in these metals, a bit of a pullback. Again, now gold is down about 120 an ounce over the past couple of days, or about 6%, and we have silver down, let's see here, silver being down probably a little bit more than 6%. Yeah, about 8.5%. It's down over $2.30 an ounce. So we're seeing overall, again, equities red, metals down, VIX up. Another red day, guys. Another tough day in the stock market. So let's pull up SPY and see what's going on this 20-day chart. First and foremost, right now, we are battling at the bottom of this wedge on this 20-day time frame. You guys can see we're fighting to hold above 417 and above 415 in general, considering 415 was support about a week ago when we held it and saw a rally off that low from 415 to about 433. So now we're retesting it. Again, we're testing the bottom of this wedge. If we take out 415, guys, it's guaranteed. I mean, it's not guaranteed, but I'm pretty dang confident we're going to fill the gap down to 410, which was the low from the end of February once we got that initial attack, that initial invasion over in Russia, Ukraine. So if we break 415, expect a $5 gap down. And if we break 410, I mentioned this on Patreon earlier, the next point we go to could be around, let's see here, I'm thinking 403 to 405. You guys can see that was a general area of support back in the middle of May of 2021. So watch out for that wedge on the 20-day chart. And again, that 415 point, I'm going to put my alert right now. Mark is at or below $415 a share. And as you guys noticed, we did get a little bit of a bounce back at that point later in the day. We saw an overall sell-off, a huge sell-off in the middle of the day, more towards the beginning to the middle of the day. Up until about 2:30 p.m. SPY went from 424.50 to about 415, so it did drop 2% intraday, and the fact that we held 415 and closed above 417, that is a good sign for the bulls. So watch out for those key levels on SPY. And when it comes to triple Q, let's pop this up. Triple Q went down 1.9, almost 2% on the day, like I said, and this one actually just broke the lows today. SPY is a fighting chance. The bulls have a fighting chance with SPY, but when it comes to triple Q, they're losing the battle. The bulls are losing. Bears are in charge. We just hit a fresh low at $317.45. That broke the lows from the middle, or not even the middle, more towards the beginning of March. We're in the middle of March now. So we broke the lows from a week ago, and we broke the lows from the end of February at about 318. So this one is in free fall. It broke the wedge. We're seeing a death cross. Now we're at a fresh low on the 20-day chart and on the 4-hour chart. It's not looking good. This could probably go lower, guys. These are key levels that triple Q broke, and SPY's about to break, in my opinion, by the looks of it. SPY's about to break a key level as well. So what do you think? Drop me a comment. Do you agree with me? Are things going to get uglier? Let me know in the comments. Make sure to smash that like button and subscribe if you haven't done so already. Doing all those things helps me out in the YouTube algorithm, and as always, I really appreciate each and every one of you guys. And with that being said, let's break down some stocks. I think I have 7 or 8 stocks here that I do want to break out. Number one is Paramount, ticker symbol PARA. They actually just changed their name from Viacom CBS to Paramount Global, and they have a streaming service called Paramount Plus. They own a lot of other different media properties, and the stock today went up over 9.5%, almost closed above 10%, but not quite yet. And what I'm noticing here when I'm analyzing the 4-hour chart is a clear-cut, clear as day inverse head and shoulders. You guys can probably see that as well. We have the left shoulder right here. We got the head right here. And we got the right shoulder. And by the looks of it, this pretty much already completed. We have clear resistance now at about 36.50, which is where we were earlier in the day. If you guys pull up the intraday chart, you can see we hit 36.50 earlier in the day. So at this point, the inverse head and shoulders completed. We're noticing a golden cross. That's another thing worth mentioning. We have the 50 crossing above the 180 SMA here on the 4-hour chart. So I'm going to set my alert at $36.50. Again, that's been resistance for a few months here, and it was the intraday high today. So if we take out 36.50, the next point I see this going is 38.25, 38.25. That was a big resistance back in, when was this? The beginning of November, and it also held as support throughout the end of July all the way to about the middle of October. So needless to say, 38.50 is a big level after 36.50, and that is where I think PARA, Paramount Global, could end up going. So set your alerts. There's a lot of momentum here, a lot of volume today. Again, up almost 10%. Let's watch and see where this thing ends up going. Kroger is another one, KR. Kroger ran up like crazy after the most recent earnings report. It blew past 50, went all the way to $62. Pretty much exceeding everybody's expectations. Nobody thought that was going to happen, but that's the stock market for you, right? Things happen that nobody really anticipates or nobody thinks will happen. So this thing shot up all the way to the mid 62s. Now it's down to the mid 50s. It's down about 11% from that recent high. It's in correction territory, and we are approaching the 50 moving average. We're actually testing it right now. In fact, we might have bounced off of it earlier today. The 50 SMA is right around $53, 53.30, and we got down to the low 54s today. So we are holding above it. We're also noticing kind of a bit of a double bottom here. I don't want to be premature in calling this, but we see a bottom at about 54.50 a couple of days ago. We got that bottom today, and that also is right by the 50 moving average on the 4-hour chart. Going back to what you guys can see, we're double bottoming right at a key support. So if we break out of, let's say, 56.50, that could be the start of a breakout after the double bottom. So I'm going to put my alert at 56.50. I'm going to be watching it there tomorrow and the rest of this week, quite honestly. This is one that I'm going to be watching for a good bit here. Another one I'm looking at here is NLOK, ticker symbol NLOK, Norton Life Lock Inc. You guys can see this stock went up 5.3% today, breaking back over the 50 SMA and solidifying a bounce above the 180 SMA here on the 4-hour chart. And we kind of got ourselves in a wedge right here. I mean, this is a nice textbook wedge that we got ourselves in. We have lower highs, one at $30.90, another one at $29.80, $30, and now today we're struggling at about $29, $29.20, $29.30. So those are three lower highs that were made, and we have higher lows at the same time. We hit what? $25, $25.50, $26.15, $27.10, $27.70. So at this point, what are we going to do? Are we going to break $29.50, start running up for 31 plus, which would take out the high from the end of, actually more towards the beginning of February? Are we going to do that? Or are we going to end up getting rejected at 29 and then going back down to 28, 27.50? So I'm going to put two alerts on NLOK, one at, let's say, 29.50, a mark is at or above, and I'll do another one, mark is at or below, let's say maybe 27.50. Let's do that. 27.50, mark is at or below. That'll give me one alert if it breaks out to the upside, and another one if it breaks trend to the downside, and either we go short or we go long. We'll see how it ends up playing out. So that's NLOK. We also had Wynn Resorts today go in the opposite direction of NLOK, and we had Las Vegas Sands go the opposite direction as well in a bigger way. We had LVS down 12% today. Wynn Resort went down about 7.5%. So we have an outbreak in China, a CV outbreak. We're having a bit of a resurgence out there. And who owns a lot of property in China? Well, Las Vegas Sands and Wynn Resorts. Both of them do. They have a lot of Chinese exposure, and I forget the exact percentage, but it's a big percentage of the company for both of these companies. So Wynn Resorts just hit a fresh low on this 4-hour chart. It hit $66. Now officially, guys, it is down from all-time highs of $153. It is down 56%, well into a bear market. This is crash territory. I mean, we're in a full-on crash when it comes to Wynn Resorts. And let me double check. Is that the all-time high? Probably, right? No, actually, I'm wrong. The all-time high for Wynn was back in 2014. The stock was $250 a share. Holy crap. So this thing is down 75% from all-time highs. So that makes matters even worse. I mean, that's even worse. Let's see Las Vegas Sands. How much is this one down? Las Vegas Sands hit an all-time high back in 07. Wow, so it really has not recovered since the great financial crisis. So it was $150 back in 07. And right now when I'm filming this video, the stock's at $32 a share. In other words, it is down almost 80%, 78% to be exact here from all-time highs. So these stocks are getting destroyed. They're all at multi-week lows, multi-month lows. I mean, it's not looking good. So the way I'm looking at it is, number one, both Wynn and Las Vegas Sands, guys, both of these, they are in falling knife mode. No one knows when the bottom is, but with that being said, there is going to be a relief rally. Now, can we time the relief rally? Probably not to perfection. I pretty much guarantee you're not going to time the exact bottom to the penny, but we could catch it. We could catch that momentum when we do find a bottom. So that's what I'm going to be looking for. I'm going to give it some time. I'm not going to try and time the exact bottom. But once we see maybe a day, 2 days of consolidation on these very oversold stocks, we might get that little snapback. You know, last time this got oversold, it snapped back from $35.70 to about $40. Now we're at 31. Maybe it goes to 30. Maybe 32, it consolidates a bit. Maybe we snap back to about $37, $38 when it comes to Las Vegas Sands. And when it comes to Wynn Resorts, this could snap back, let's say, from the mid-60s where we are now, almost $67, more like high 60s, right? This might go from $67 maybe back to the low 70s, you know, maybe back down mid-70s, or maybe up to, rather, mid-70s. So watch out for these two. They're very beaten down. There's a lot of negative news right now around China, CV. They have a lot of exposure, but as this dies down, hopefully, if it does, I mean, it probably will at some point, then we might get that snapback. So keep your eyes on Wynn, Las Vegas Sands. MRO is another one that I'm looking at. Marathon Oil, this went down 4.3% today. You guys can now see it is down about $3.60 from the recent highs. In other words, it is down 15% in correction territory. And point blank period, guys, that's been my saying these past couple of videos. The uptrend is still intact as we are seeing this pullback. That's it. It's healthy. It's a healthy pullback. We're pulling back down on that 180 SMA, which you guys can see multiple times we have pulled back to, and we've held it, and we've bounced. We held it there. Literally, look at all these times I'm outlining it with this oval tool, right? If we hold above 21, 22 bucks, we get some buying pressure, volume kicks up. We get maybe oil rebound a bit, which oil right now is sitting right at 102 a barrel. It's going down as I'm making this video. If those things line up, we could get a pop in MRO, and this could go back 24, 25, maybe even higher per share. Same exact thing, thought process with XOM. ExxonMobil's now down about 11, 12% a share from that recent $91 high. It's in correction territory, and just like MRO, XOM is in an uptrend. Clearly, we're holding above the 180 SMA, which has held many times throughout the past couple of weeks, months, during little sell-off periods. So watch out for XOM and MRO and energy, oil in general. And the last one for this video, guys, and if you made it this far, let me know in the comments. And don't forget to hit that like button if you haven't done so already. The last one, which we called out last week, did we not, guys, is American Express, ticker symbol AXP. This one did very well today, up 2.9%, considering, like I mentioned in the beginning of the video, the markets did not do well today. So the fact that AXP outperformed is a very good sign. And now we pretty much rallied from 155. Now we're in the mid 170s, and we're getting really close to a big resistance right by the moving averages on this 4-hour chart at about 175, 180. And on top of that, we have big resistance at 175 due to that being the high point from the middle of January. So what I want to point here to you guys is forget the uptrending channel on the longer term chart. Forget about that for a second. You guys can see that here on the yearly chart. Look at what I'm about to show you all. Let me clear this drawing set and let me get these tools out. Let me show you this. We have a potential head and shoulders forming. That's what I want to show you all. We have a left shoulder here, head right here, and then we have the right shoulder potentially forming right here, right? If we fail at the neckline, pay attention here, guys, neckline being about 180, right by those moving averages, this could fall like a brick. We might be going back down 160s, 150s. But if this takes out the neckline at $180 a share, we could be going 190 plus like that. That's what I'm thinking. So I'm going to put my alert at $180. Mark is at or above. We'll watch what it does at that point, and if it breaks, perfect. We can catch a little 10, 15, maybe even $20 per share move on AXP. And with that being said, guys, that's it for the video. I hope you all enjoyed it. If you did, hit the like button, subscribe, drop me a comment, let me know your thoughts, and feel free to join my Patreon if you guys want my real-time buys, sells, call-outs, morning videos, Discord access, and more access to me throughout the day. All of that's on Patreon, link down below, or you guys can go to StockSurfast.com/Patreon. Make sure to check it out. I think you will find some value there. And if you want some free money, check out my Moomoo link down below. You get 1 free share of NEO and 5 other stocks, each of which could be valued up to $3,500. A lot of free money down there, guys. All you have to do is use my link, deposit at least $100, and boom, you get your free stocks. And with that being said, I'll catch you all in the next video. Thanks for watching as always. Peace out.